Guys, I just thought I would do a London session recap for EU and AU, seeing as Matt's away. Let's start with EU first. Obviously, we know sort of the higher time frames. We swept the major weekly, monthly low, sort of reached parity. We're obviously anticipating the pullback on the daily. Over the last week, we're just sort of ranging. So we had this sort of decent V-shaped recovery, and then we're just ranging sideways now. My sort of gut feeling of this is that we're basically just cracking sideways before we sort of get an impulse to the upside to mitigate possibly the supply and the premium. So from a daily perspective, I definitely favoured longs to sort of come up to the EQ of the leg, because usually on the daily, if you look at any of the previous ranges, like price does tend to pull back to mitigate the EQ. So on the daily, I sort of favoured longs out of this sort of range. The 4 hour, we technically had a bearish IBOS here, so technically the internal structure is bullish or bearish, sorry, but we had this sort of unmitigated POI here that led to this IBOS. So it is entirely possible that basically we had the bearish IBOS and then just to mitigate this demand, because you can see that was a pretty minor pullback as well. So if you were sticking with sort of the larger ranges, sort of this would have been you would have counted that as one leg. So you wouldn't have counted this as a bearish IBOS. Your internal structures that be bullish, but then we mitigated this demand. We had a sweep of liquidity and a bullish chalk during FOMC. So usually whenever you see a sweep of liquidity like that there, usually you're going to see it move away from it. And then following the bullish chalk, you can see we pulled back in, mitigated the demand that caused the chalk, pushed up, didn't close above the high, but still pulled back into this demand. And sort of demand was clearly being respected in the 4 hour. So this morning, sort of coming to the charts, we're sort of sitting around here. So my main feeling on the 4 hour was basically to anticipate the follow through of this demand, where basically we put in a new high and then potentially come up here to this daily supply. Obviously we could keep ranging here for a lot longer, we could just keep sort of taking the highs and the lows and ranging sideways, but coming into London, this is what I favoured, because obviously we've mitigated this demand has been respected, etc. So on the 15-minute, try and clean this up a bit, just go back to bar replay. So say coming into London at around this time. At this point, coming into London, we had obviously, the internal structure was bearish overall, because this was sort of my major internal swing. So this was like the protected internal high. But if you look at this here, it's like we pulled up. These are all sort of the demand ranges being respected. So considering the M15 was bullish overall, where this was the break of structure, we had pulled back and mitigated this high probability demand in the discount. So it's very possible the M15 pullback is finished. So it was in my mind that basically these demand ranges would keep being respected until eventually we got another bullish break of structure, which sort of lined up with like the 4 hour and the daily thesis as well. So coming into London, I was potentially looking for a short for a sell from this supply. It swept liquidity, it had a bit of inducement in front of it, and then I was sort of thinking that the internal structure was still bearish overall, so we could potentially roll over and take this low. But then I knew at a minimum that I could get my risk off, basically get the trade to break even before we come into this sort of demand here or around the low. But potentially looking for sell there, but then sort of as price action developed, basically that swept the low. So obviously my ideal scenario was basically for price to come into this extreme demand and then basically obviously get the M1 entry model and target the high. But this just swept the low by a micro pip, I believe. So then this gave us the bullish chalk in the same candle. So at this point then, the fractal structure switched bullish, so at this point we don't have to come down and mitigate the extreme. There was potentially an aggressive M1 entry with it following the M15 shock. Personally, I wasn't too keen on it because we had no clear engulf candle yet to basically give us M15 demand to trade from. And in my experiences, when you get a sort of weak wick break chalk like that, in a lot of cases just a liquidity grab, especially when you have sort of this unmitigated extreme. So personally I wasn't going to drop down to the M1 there. I was sort of waiting for more development, but let's go through the M15 and then I'll switch to the M1 to show you the entry afterwards. So obviously we had the bullish M15 shock. Now we have this sort of clear engulf candle to trade from. So at this point I was looking for price to pull back in here to look for longs. I wasn't interested in sells at this point from here because obviously we had the bullish M15 shock. And like if you look at all these ranges, just look at price, you can see it's like impulse, correction, and this is just the same thing. It's like impulse, correction. So the next logical thing is that this demand range is going to be respected and basically these highs are going to be run. So at this point I wasn't keen on looking for sells from this here. So I'll sort of rule that out. Obviously huge momentum to the upside. I was still waiting for price to pull into this demand, but it obviously hasn't done it yet. There's potentially some sells from this supply. I personally wasn't a massive fan of them again because it's quite clear impulse, correction, impulse, correction, impulse. To me, this was a clear just correction to pull back in and mitigate this demand range before continuing higher. This high, yes, it caused a bearish shock, but it didn't cause a bearish II boss running, so it was weak. So I just personally didn't really want to be selling from it because my whole sort of hypothesis was that the M15 pullback was over, so this high was going to be run. So I definitely favoured buys, and then just trading from there is pretty low probability in my opinion. But again, I'll show you the entries in the M1 afterwards. Sort of got a bit of a pause again, just missed this demand, which is pretty annoying because that's what I was looking for longs. Then when price sort of broke out of this high, it gave us this sort of new demand range to trade within. So we had this sort of inside bar that led to this range failing, and also this larger supply range, while the internal structure hasn't switched bullish yet because we've got no close above. That sort of whole range failing is a pretty bullish sign. So I was then looking for price to pull back into this M15 demand for a long, but yeah, you can see it pulled in. It didn't give an entry in the M1 as I will show you, but yeah, in the M15 the whole trade thesis basically played out perfectly. Unfortunately we didn't hit this POI, didn't get an entry model here, but you can see basically the whole thesis of M15 pullback was over. We'd mitigated the demand and the discount, and then basically the expectation was price was going to put in a new swing high, so we're basically just following the demand ranges on the M15 trying to get involved, but unfortunately didn't get any trades. On the M1, this was the entry following the M15 shock. I think the M15 shock was there. It's pretty clear way it played out. Like it's a flip zone. It reacted to those wicks, swept liquidity, took out. This was your technically your M1 swing high, so you could say the M1 switch bullish. Yeah, look, it makes sense why it played out. It's just personally there was no valid M15 demand to trade from at this point because there was no engulf candle. So personally, I want to be trading from an M15 zone in the majority of cases. So it didn't really fit my plan, but again, if it fit your plan, well done for those who caught it. Then here, this was the M15 supply at the very weak high that sort of caused the initial bearish shock. You can see and there's a pretty clean entry model to be fair. It's like had that sort of minor liquidation there and then pulled back in. That wick is sort of a flip in the 15S, then got the M1 shock, then pulled back in, then see we put in another low here, so in theory you could have entered from there following the bearish order flow, but as I said, I really wasn't a fan of sort of the overall M15 area, so I was expecting the weak M15 swing high to get run, so I wasn't really interested in sells at this point. And then here, this was the M15 POI that basically led to the II boss, the supply range failure. So you pull back in, and then look, you can argue there's definitely potentially an entry there. You could call that sort of your M1 liquidity sweep, but again, it's very minor. Like it's just a two candle pullback versus a lot of momentum down. Then you got the M1 shock. It's like the candle closed bearish and closed below the previous candle, so like that's not valid supply, but then it just sort of shot up. So but you can argue there's an entry there, but it's not really something I would take. It's not the clearest. I think if you take a lot of these entry models, I think you're going to get pretty broadly smashed up over a large enough sample size. But obviously the M15 POI, the story played out perfectly, but unfortunately, yeah, this was probably the cleanest trade if it fit your plan. But personally, I just wanted to see something clear in the M15 to trade from. Wouldn't touch these trades here just on account of Didn't like the overall M15 area trading from the week high, etc. And this here, I like this M15 POI. I wanted to get involved, but just wasn't really an entry model for me. So that is AU. Unfortunately, the M15 for our thesis played out perfectly, but no trades, unfortunately. On AU, then the daily is a bit of a tricky one. We've mitigated the EQ of the daily range, so it's possible we could roll over from here, particularly because this was sort of the most recent high boss in my opinion. So this is the protected internal high, so it makes sense that having mitigated the EQ that we would roll over the downside from here. Price action in the 4 hours or in the daily as well, it's very corrective. Like you can see, price is pushing up every time it breaks the high. It's wicking. Like there's nothing, it's not very convincing bullish momentum. So again, there's a lot of reason there to think that price could roll over to the downside. Then obviously we could easily push up higher to sort of mitigate this flips on the premium, so you do have to sort of remain neutral too. 4 then, coming into this morning, we had sort of swept this high into this sort of POI nested within the daily, and then we had a bearish chalk. This demand failed as well. Price just wicked that low, which again isn't a bullish signal. Now obviously it turned out to just be a liquidity sweep and the price is pushed higher, but demand failing is never going to be a bullish signal for me. But yeah, 4 hours bullish overall, so that was your swing structure. So it really was sort of the opinion that this could have went either way. We could have just continued basically the bullish trend, basically just going like this here, keep going higher into the daily premium, or having had the bearish chalk and this demand failure, sweep liquidity in the daily demand. I was looking for sells if they lined up sort of within this supply that caused the chalk. Just sort of trying my best to keep neutral as possible without being welded to a bias either way. But obviously this turned out to be just a liquidity grab, and price is pushing up higher now. But we weren't in one at the time, so this morning we were sort of sitting in this demand or this supply. So I was sort of mindful of trying to play the markets both ways. Here, I'll delete some of this here and use bar replay just to give you a better idea of my thoughts. So sort of coming into London, price was sitting here. Now, swing structure was bearish. This was sort of the bearish boss. We had a bullish eye boss here and another bullish eye boss here, so we had sort of sustained bullish order flow internally, and then we had swept this sort of pretty major low as well in the 4 hour and M15. So it wasn't beyond the realms possibility that this bullish order flow would sustain and basically we would end up switching bullish, which is essentially what happened. But this point here, this is completely valid demand, led to the IBOS, so this could easily have held, which it turned out doing. But personally, what I was sort of looking for at this point was basically viewing this, because the push up was sort of very corrective, I was basically viewing it as basically liquidity being built for the extreme. So basically that there, and I thought basically price would sweep the lows and then maybe give us the entry model here so we could target this sort of supply at a minimum, because obviously the M15 was bearish overall and we had the 4 hour shock, so we could have easily rolled over to the downside from here. There was no M1 entry within here that would remotely make my plan. Like you can see, I'll show you in the M1 in a minute what sort of played out, and it's obvious sort of in hindsight why it played out, but I don't see how you would pick that in the moment. So then we played on, obviously got the sweep there. That's sort of your sign that we're not going to come any lower, and then yeah, pushed up. So that's your bullish IBOS, and this gives us fresh demand range to trade from. And then at this point it's pretty much waiting for a price to pull back in here to sort of give us the entry model within here, before potentially looking for maybe a sell from here if the entry model set up, because obviously the M15 is bearish overall and we've had a bearish 4 hour chalk. It's inside 4 hour supply as well, so it makes sense. But price just pretty much kept smashing up. There was no sell entry at all within here. This is a situation where yeah, it's extreme, it's pro M15 trend at the time, so it's more than logical to be looking for sales from there. But I wouldn't, it's not an area that I would be super aggressive the entry model, just taking an aggressive M1 chalk, because there's absolutely no inducement whatsoever in the leg. Like that's just wide open space, there's nothing here, and the POI didn't sweep liquidity either, so that is a scenario in the M1 where whenever price is coming in here, I want to see sort of a pretty clear liquidation, sort of, you know, where you see the price builds clear sort of equals, and then sort of get the textbook entry model where you get the flip, the V shape, everything. But I'll show you in the M1 in a second, but nothing really set up. So unfortunately didn't pull back in here to look for the longs, because sort of it was very possible that this sort of bullish order flow would sustain, and then didn't really get any sells from within the supply. So yeah, you can see in here first. You can see this is sort of the valid M15 demand, but you can see what played out was essentially the flip zone that led to the initial shock of this POI. But I mean, when prices sort of range like that there and the momentum coming down, that's not somewhere I would be leaving an entry, because I mean, how do you choose there? Yeah, there's a bit of inducement in front of it or whatever, but the extreme's unmitigated, so that's one of them that it's obvious why I played out, but it's not somewhere that I would personally leave an entry. And then you can see here, at the time I was sort of because we had a very clean M1 refinement within the sort of M15 POI, where you can see it's very clear swept liquidity. I had that sort of drawn on, so at the time, even though there was no inducement, didn't sweep liquidity, etc. in the M15, I was sort of tempted by this at the time, even though there was no clear liquidation, just because of the clear M1 refinement at the extreme. But you can see we pulled back in here, got sort of you can see the reaction where got sort of the flip, but we didn't get the chalk, so there was no entry there. Anyway, to be honest, had we got sort of a chalk, I probably would have been tempted with that, just on account of how clean the M1 refinement was. But yeah, there was no trade anyway. And then after price spiked through the POI, basically wasn't interested anymore. You know, you technically get the chalk there, so you could have looked at like entering on the extreme or whatever. But that's personally, after the POI fails, I just leave it, as supplier demand feelings rarely bullish or bearish sign, depending on which way you're looking. And then yeah, that's pretty much it. We got another bullish boss basically at the end of it, so the M15 is bullish again. So coming in New York, I'll probably be looking for just basically price there. You can see we've pulled back into this sort of demand that caused the break of structure, which is again something that I was talking about on the weekly market breakdown, that I do always keep an eye on this, because when there's a lot of momentum to the upside, often it doesn't pull back that deeply. So that's sort of why I keep an eye on that. Obviously, it didn't sweep liquidity. It's not even really a flip zone. It didn't react to that, but it did sort of lead to the break of structure. So it is always worth keeping an eye on, in my opinion. But yeah, that's AU. Absolutely no trades there for me. Again, the higher time, the narrative sort of played out perfectly. Trying to stay neutral. But yeah, that is that. As the two pairs covered. So hopefully you took some value from that, guys. If you have any questions on, just put it in one of the public channels in Discord, and I'll get back to you. Thanks very much, guys. Have a good day.